Hey, this is Matt from InvestiQuant. Today is Monday, November 9th, 2020. And this morning we had giant up gaps across the board. Well, almost across the board. NASDAQ didn't quite have a giant up gap, but we had giant up gaps in the S&P, the Russell, and the Dow this morning. NASDAQ was not quite up as much. But since the open, we sold off in the first half hour or so, and since then we've gone sideways. We're still holding well above Friday's high in 3 of the 4 instruments, whereas the NASDAQ has made it back down to Friday's close and is consolidating there. But basically, we saw a giant up gap that started the test lower and then has kind of gone quieter in the afternoon and has started to kind of consolidate in the afternoon session. So what I wanted to do this afternoon is take a look at a similar scenario where you get a sizable up gap in this bullish market. And then in the afternoon, you're trading below the open, but you're still above the prior session high. So that's something that we can easily test and discover, and that's exactly what we're going to do. So let me set this up and discover. We'll look at all 4 instruments here, even though this is not technically true for the NASDAQ right now. The setup that we're going to be looking at is based upon going long at the market at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. For the opening filters, I'm going to use this gap size as a percentage of the 5-day ATR, and I'm going to say that the gap size is at least 75% of the 5-day ATR, and it is an up gap. This morning, we actually had about 170% of the 5-day ATR for the gap size in the S&P. I'm only using 75% because we just will not have any samples. In fact, I think today was the first sample of that size in our entire database going back to 2003. So very rare scenario this morning, and trying to replicate it is going to leave us very few results. So I'm going to go a little bit less strict on the opening gap size, but it's still going to be quite sizable at 75%. Next, I'm going to go into the post-open filters and describe this action where we're trading below the opening print. So I'm going to hit the 3 p.m. price close is below the open. However, the low of the session is still above the prior day high. So I can come down to this intraday low versus daily levels, and I can say today's intraday low is greater than the prior high, which would be Friday's high. And then lastly, I'm going to put us in a similar market environment of above a 10, above a 200-day simple moving average, and then click View Results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when you get a gap up of at least 75% of the 5-day ATR. And then at 3 p.m., you are trading below the open, and your intraday low is above the prior session high. So you got a red candlestick where the low is above the prior day high, and this is taking place in a bullish environment defined as above a 10 and above a 200-day simple moving average. If you take a look at our sample sizes, you can see this is a very rare pattern, and this is without me getting as specific on the gap size as we had this morning. Had I done that, we'd be looking at 0 samples. That's just how rare this scenario is. But when I back it off to try to get a little bit more samples in here, we've got 16 in the S&P now by using this gap size of 75%. NASDAQ only has 5 samples, the Dow 20 samples, and the Russell 8 samples. So very rare territory here. If we take a look at the win rates on them, I don't want to get too specific on a win rate since there's just not very many samples here, but if you look at all 4 of them, none of them have been weak historically. S&P is a little bit stronger than the Dow and the Russell, and the NASDAQ only has 5 samples, so I don't want to read too much into that. And if we take a look at average win, average loss, average win on the upside here for the S&P is larger than the average loss. Pretty similar sizes in the NASDAQ. Looks like the Dow, the average loss is larger than the average win, and in the Russell, the average win is larger than the average loss. So 2 of the 4 have larger average wins than losses. One is pretty similar, and then the Dow is the only one with an average loss that is larger than the average win. But historically, this has not been a bearish pattern into the close, even though it is forming a red candlestick. It has not necessarily been bearish as we approach the end of the session. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.